Hello and welcome to this week's market update report for the week ending July 2nd, 2010. My name is Dan Ludwig, Sales Director for the Shorewest Realtors office in Oconomowoc, Wisconsin. This week I want to touch a little bit about how the interest rates and the home prices have affected the cost of home ownership for buyers. And right now, combining those two things, the cost of home ownership has never ever been better than what it is today. And you can look at it two different ways. The first way we're going to look at it is if you're a buyer and you want to, and you can afford a $200,000 loan. If you look on the screen at today's rate at 4.5%, that $200,000 loan will cost you about $1,013 a month. Now, if by chance, and we all know that rates will not stay low forever. Let's say you're looking for a home and you don't know which one to buy and you're kind of on the fence. If those rates go up to 5%, your monthly payment now has just increased $60 per month. Now you take that loan over 5 years of home ownership, it's going to cost you $3,600 more in 5 years, $7,200 more in 10 years, and $14,000 more over a 20-year span, just because the rate went up 0.5%. The other two examples are 5.5% and 6%, and as you can see, by waiting as a buyer, that home could cost you over 20 years $46,000 more by just missing out on the 4.5% rate versus a 6% interest rate. So this example is, if you say, I can borrow $200,000, here's what's going to cost me, I can actually save that amount of money on a monthly payment and over the years of my loan. Let's take the second example. You can actually now, at 4.5%, you can actually afford more home. So right now, if you can only afford a $180,000 loan and the rate's at 6%, your monthly payment is going to be $1,079. But today, because the rate is at 4.5%, you can actually afford a $210,000 loan, actually less than what it would cost you to borrow $180,000 at 6%. So when you look at this, and you're looking at a house that maybe is around $190,000, $200,000, it doesn't quite have the things in there that you want. Maybe it doesn't have the 2 baths versus 1.5, or the 4 bedrooms versus the 3 bedrooms. But if you jump up $30,000 more in a house to $210,000 and take advantage of the 4.5% interest rate, that $30,000 more home actually will cost you about $15 less per month by taking advantage of today's rates. So what do we have? A lot of experts right now are saying that home prices are at 2004 levels. Combine that with historically low interest rates, and your cost of owning a home has never been better. Of course, only you truly know. If you do have a desire to settle down in your own home and enjoy everything that comes with the home ownership experience, this is definitely the time to act. I want to thank you for attending this week's webinar. And again, if you have any questions on today's market, please contact your Shorewest Realtors agent or contact myself at dludwig@shorewest.com. By staying informed, we can all keep the market moving in the right direction. Thanks, and make it a great day.